Hello everyone, welcome to the Financial Information channel. My name is Marvin. In this video I'm going to give you the top 5 stocks that you can buy during the month of November. Just keep in mind that you need to do additional research if you plan to invest or to trade the following stocks. Now let's begin with the video, and the first thing that I'm going to mention is how the previous stocks during October perform. I mentioned 5 stocks during October, and this is how they perform. The number 5 company during October was Goldman Sachs, and the company was up 2.26%. And the number 4 company was Broadcom, and the company was positive with 8.85%. And the third company was Nvidia, that was positive. It was positive with 15.66%. And the number 2 company that I mentioned was Google, and Google was positive with 5.94%. And the number 1 company that I mentioned during October was Tencent, and it was positive with 2.58%. So October was actually a really good month. But now let's take a look at the November stocks. And the number 5 stock is gonna be Equinix. Now Equinix basically is a data center provider to companies. It has over 175 plus data centers around the world, which is actually impressive. And the good thing is that they are actually very diversified. And as you can see in the graph, it has a lot of diversification among different sectors. In the cloud and IT has 28%, in the content and digital media has 14%, enterprise 15%, financial services around 19%, and network around 24%. It is very diversified, and it has a huge name of list of customers. Among the customers is Amazon, Google, Microsoft, and Oracle. And the company is very well known. Now let's take a look at the fundamentals. Now as you can see in the screen, the share price is high. It's around 463.50 cents, and it has a high price to earning ratio with around 170. The company actually pays a dividend, and the dividend is 1.75%. But now let's take a look at the forward PE, which matters to me. And the forward PE is 67.57, which is a huge improvement. Now let's take a look at the profit margins. And in the profit margin at this moment is 5.18%, and the operating margin is 18.75%. But now let's take a look at the income statement. And in the income statement, it has a quarterly revenue growth of 18.40% and the quarterly earning growth of 2.40%. But now in the balance sheet, the company has around 1 billion in cash and around 9 billion in debt. And in the short ratio, it has around 3.24%. So not many people expect this company to move down. And the company has gone up around 29% during the year, which is actually not a lot when you include that the data business and the cloud business has actually improved quite a bit during the last few years. And I think the share price has a good chance of being in the 500 in the next few months. And now for the number 4 company, it's gonna be Vistra Energy Corporation, and that company is in the utility sector, and it benefits with some part of the energy sector. And the good thing is the company hasn't gone up as much. It has only gone up around 25% during 2017. And the company has created a lot of news lately. It announced that it's gonna create Dynergy so they can combine both companies. And the good news about the company is that it benefits when the energy sector is down. And as you can see in 2017, the energy sector has been down quite a huge amount. However, once we see the energy sector come back, this company is gonna receive more revenue because it benefits when the energy sector is up as well. But now let's take a look at the fundamentals. And as you can see in the screen, the stock is priced fairly. The share price is around $19.44, and the price to earning ratio is 11.38, and in the forward PE is around 21.36, which is actually higher, and that means that the company expects to grow up quite a huge amount during the next few months. Now in the profit margin, it has around 426%. I don't think that is the correct number. Now in the operating margin is 12.40%. But now let's take a look at the income statement, and it has a quarterly revenue growth of 5.10%. We can see in the balance sheet that the company has almost 1 billion in cash, and in debt it has 4.6 billion in debt. I don't think this is a good balance sheet, but it is one of the best among the sector. Now in the short ratio it has 0%, and I think this company has a good long-term play if they're able to execute their business and increase their revenue. Now for the number 3 company, it's gonna be MasterCard, and this is one of the best companies in the stock market. In 2017, the company has gone up over 44%, and it has done really well during earnings. Now the company has announced that it's going to stop asking for signatures when you make a purchase through a debit card or a credit card using the MasterCard. Now that might compromise the security, however I don't think that's gonna be a problem for the company. And I have a history with this company. I was starting investing into this company in 2010, however I sold my shares back at the beginning of 2012. Now the company had one of the best stock splits that I remember back in 2014. And basically what happened, this company announced a stock split back in December 2013, where if you had one share, that one share was going to be converted into 10 shares for MasterCard. And at the time of the stock split, the company share price was around $783. Now at this moment the stock share is not that high, and I don't think we're gonna see another stock split anytime soon. But that gives you an idea how this company can perform in a short time. But now let's take a look at the fundamentals, and as you can see in the screen, the share price is 148 with 89 cents. The price to earning ratio is around 36.95, and the company has a dividend yield of 0.59%. The next time the company report earnings is going to be in January 2018. Now in the forward P, the company has a forward P of 28.15. And in the profit margin and the gross margin, the company has a profit margin of 38.30% and a gross margin of 54.43%. And in the income statement, the company has a quarterly revenue growth of around 13.30% and a quarterly earning growth of 19.70%. Now in the balance sheet, it is positive with 6.96 billion in cash, and total debt it has 5.33 billion in debt. So it has more cash than debt, which is nice. And in the short ratio, it has a short ratio of 0.95%. So not a lot of people are betting for this company to move down. And just like I mentioned earlier, this is one of the best companies that you can invest for the long term. And one of the questions that you might ask yourself is this better than Visa? And I think both companies are actually excellent. I have more history with MasterCard, so I think that is the reason why I chose this company. Now let's go to the next company. And the number 2 company is Cirrus Logic, and this company is in the semiconductor space. And the type of business this company does is mostly related to the audio. It does a lot of things with audio codecs, amplifiers, and one of the most important things is they have over 2,500 pending and issued patents. Now the company has a huge number of customers. For example, it has Vizio, it has SiriusXM, it has LG, and 2 of the customers that are not mentioned in this list is going to be Apple and Amazon. Now Apple had their products in the iPhone, and Amazon had their products in the Amazon speakers. And based on the products that Amazon announced last September, I think they're going to implement the Cirrus Logic products into the Apple Home speaker. So that product will improve the revenue over the long term. Now let's take a look at the fundamentals. Now you can see in the screen, the share price is around the 56. The price to earning is around 13 with 10 cents. And the company will report earnings on November 2nd. And the company doesn't pay a dividend. Now in the forward PE, it's expected to have a forward PE of 11.67, and in the profit margin is around 17.87%, and in the operating margin is around 21.80%. Now in the income statement, we can see the quarterly revenue growth of around 23.60% and the quarterly earning growth of around 137.50%. And I think that number probably needs to be revised. But now let's take a look at the balance sheet. And in the balance sheet, you can see that the company has around 175 million in cash and it has no debt. Now in the short ratio, it has a short ratio of 10.80%. Now the good thing or the bad thing, depending on how you see it, the company is negative in 2017. The company is negative with 0.96% during 2017. And I think it's due to a few things. First, the management team has been very weak. It has given bad guidance during the last few quarters. And the company will report earnings in the next few days. And I think the numbers don't matter as much. What we need to hear is the guidance. The company needs to have a better outlook, especially since the iPhone X is going to be released in the next few days. In addition, the company has become more diversified instead of just being in Apple. And the company needs to do better because it is in one of the hottest industries, which is the semiconductors. But now let's take a look at the number 1 stock during November. And that company is going to be Triple M. It is one of the best industrials in the stock market. And the company has done really well in 2017. Now the company specializes in a lot of things. They do a lot of products for the solar energy, for the healthcare. And the company sells a lot of products that are very well known. And during the last 2 quarters, the company has posted strong numbers. But now let's take a look at the latest quarter. And as you can see, it has a GAAP EPS of around 9 to 9 cents. And the organic growth is around 4 to 5%. That is based on the guidance for the remainder of 2017. And as you can see, it has a good number on return on invested capital of around 20+%. And the free cash flow around 90 to 100%. And the company has been doing really well during the last few years. This is one of the companies that I actually like because it has a good dividend, and just like I mentioned earlier, even though the company has posted 2 strong quarters, the company shares have actually moved down. But now let's take a look at the fundamentals so we can see how the company is doing in 2017. And as you can see, the share price is around 230.90 cents and it has a price earning ratio of around 26.26. And the next time the company report earnings is going to be in January 2018. And it has a dividend of 2.03%. And this is one of the things that I like, that it has a good dividend. Now let's take a look at the forward PE. In the forward PE, you can see that the company is going to be around 23.90 and it has a good profit margin of around 17.65% and the operating margin of 23.18%. And in the income statement, we can see a quarterly revenue growth of around 1.90% and a quarterly earning growth of around 22.60%. Now in the balance sheet, that is one of the weaknesses. It has around 2.8 billion in cash and around 11.31 billion in debt. And in the short ratio, it has 0.07%. And in 2017, the company has gone up over 28%. Now, what do I think about this company? The company has done really well during the last few years. And what I like about this company is that it pays a good dividend over 2%. And over the last 5 years, the company has gone up over 162%. So it actually combines the growth and the dividend. And at the same time, this is one of the most iconic companies. It is a long-term investment for me. Just expect to have that steady growth and at the same time receive that dividend. And that is going to be everything for the video. Please leave in the comment section below which companies do you plan to invest or are you investing for November. And for me, I'll be paying really close attention to Cirrus Logic. And remember, you can subscribe to the financial information channel. I'm going to continue bringing videos about the stock market, personal finance, and how to make money online. And I'm going to thank you once again for watching the video. Have an excellent day and take care, my friends.